As the sun rose over the bustling streets of Shenzhen on a crisp March morning in 2025, the global automotive industry was about to witness a seismic shift. BYD, the Chinese electric vehicle manufacturer, had just announced its annual revenue figures, sending shockwaves through boardrooms from Detroit to Silicon Valley. For the first time in its history, BYD had not only crossed the $100 billion mark in annual revenue, but had also surpassed its American rival, Tesla, in this crucial metric. The news spread like wildfire across financial markets and social media platforms. Investors, analysts, and car enthusiasts alike scrambled to make sense of this new reality. BYD, once a small, rechargeable battery maker, had transformed itself into a global automotive powerhouse, challenging the very notion of American dominance in the electric vehicle space. As the dust settled on the initial announcement, the numbers began to paint a clear picture of BYD's meteoric rise. The company had reported a staggering revenue of $107 billion for the year 2024, representing a 29% increase from the previous year. This figure dwarfed Tesla's $97.7 billion, which had grown by a modest 1% year over year. The contrast was stark, and it told a story of two companies on divergent paths. But how did BYD manage to achieve this feat? The answer lay in a combination of factors that had been brewing for years. At the heart of BYD's success was its strong performance in the domestic Chinese market. The company had become the undisputed leader in car sales in China, dethroning the long-standing champion, Volkswagen. This dominance in the world's largest automotive market provided BYD with a solid foundation for its global ambitions. However, BYD's success wasn't limited to its home turf. The company had been aggressively expanding its presence in international markets, particularly in Southeast Asia, Latin America, and the Middle East. In 2024, BYD saw a remarkable 72% surge in overseas shipments, a testament to the growing global appetite for its vehicles. This international expansion played a crucial role in pushing BYD's revenue past the $100 billion milestone. The numbers told an impressive story. BYD had sold a total of 4.27 million vehicles in 2024, a mix of both electric and hybrid models. This figure was more than double Tesla's deliveries of 1.79 million units for the same period. BYD's diverse product lineup, ranging from affordable compact cars to luxury SUVs, had allowed it to capture a wider segment of the market compared to Tesla's more premium-focused offerings. But BYD's success wasn't just about volume. It was also about innovation. In 2024, the company had introduced a groundbreaking charging system that allowed its electric vehicles to charge for 400 kilometers, about 250 miles, in just 5 minutes. This technological leap addressed one of the most significant barriers to EV adoption, charging time, and gave BYD a considerable edge over its competitors. Moreover, BYD had rolled out advanced driver assistance technology across all its models, democratizing features that were once reserved for high-end vehicles. This move not only enhanced the appeal of BYD's cars, but also positioned the company at the forefront of the autonomous driving revolution. As news of BYD's financial triumph spread, it sparked intense debates about the future of the automotive industry. Many saw it as a symbolic changing of the guard, with China assuming leadership in a sector long dominated by Western companies. Others viewed it as a wake-up call for traditional automakers, highlighting the urgent need to accelerate their transition to electric vehicles. The reaction in the United States was particularly mixed. Some saw BYD's rise as a threat to American technological and industrial supremacy, echoing concerns that had been raised about other Chinese tech giants in recent years. Others, however, saw it as an opportunity for healthy competition that could drive innovation and ultimately benefit consumers. Amidst the buzz, it was important to note that while BYD had surpassed Tesla in revenue, the American company still held a significant lead in market capitalization. Tesla's market value stood at approximately $800 billion, dwarfing BYD's $157 billion. This discrepancy reflected the different ways in which investors valued the two companies, with Tesla still seen as a technology leader with significant growth potential. The contrast between BYD and Tesla extended beyond just numbers. It reflected two different approaches to the electric vehicle market. Tesla, under the leadership of the enigmatic Elon Musk, had focused on creating a premium brand with cutting-edge technology and a cult-like following. BYD, on the other hand, had pursued a more diversified strategy, offering a wide range of vehicles at various price points and leveraging its expertise in battery technology. As analysts dissected BYD's success, they pointed to several key factors that had contributed to its rise. The company's vertical integration, controlling everything from battery production to final assembly, had given it a significant cost advantage. BYD's early focus on hybrid vehicles had also allowed it to capture a larger market share in regions where charging infrastructure was still developing. Moreover, BYD had benefited from strong government support in China, including subsidies for electric vehicles and preferential policies for domestic manufacturers. This support had helped BYD scale up rapidly and invest heavily in research and development. The implications of BYD's revenue milestone extended far beyond the automotive industry. It was seen as a symbol of China's growing technological prowess and its ability to compete with and even surpass Western companies in high-tech sectors. This shift had geopolitical implications, potentially altering the balance of economic power between China and the United States. For consumers, BYD's rise promised increased competition and potentially lower prices in the electric vehicle market. The company's focus on affordable electric cars could accelerate the adoption of EVs, particularly in developing countries where price sensitivity was a significant factor. However, BYD's success also raised questions about the future of traditional automakers. Many of these companies were still in the early stages of their transition to electric vehicles, and BYD's rapid growth highlighted the urgency of this shift. There were concerns that some legacy automakers might struggle to compete in this new landscape, potentially leading to consolidation in the industry. Environmental advocates saw BYD's success as a positive development in the fight against climate change. The company's ability to produce affordable electric vehicles at scale could significantly accelerate the transition away from fossil fuel-powered cars, potentially reducing global carbon emissions. As the day wore on and financial markets digested the news, attention turned to what this meant for the future. Would BYD be able to maintain its momentum? How would Tesla and other competitors respond? And what did this mean for the broader shift towards electric mobility? These questions underscored the dynamic nature of the automotive industry in 2025. The sector was undergoing a transformation unlike any it had seen since the introduction of the assembly line, with new players rising to prominence and established giants fighting to remain relevant. For BYD, the challenge now was to build on its success. The company would need to continue innovating, expanding its global presence, and fending off competition from both traditional automakers and new EV startups. It would also need to navigate the complex geopolitical landscape, particularly as tensions between China and the West continued to simmer. As night fell on Shenzhen, the lights in BYD's headquarters burned bright. The company's leadership knew that while they had achieved a significant milestone, the race was far from over. The electric vehicle revolution was just beginning, and BYD's revenue triumph was but one chapter in a much larger story. In boardrooms and garages across the world, competitors were already plotting their responses. The next few years promised to be a period of intense competition and rapid innovation in the automotive industry. For consumers and environmentalists alike, this competition held the promise of better, more affordable electric vehicles and a cleaner future. As the world looked on, one thing was clear: the automotive industry would never be the same again. BYD's rise had shattered old certainties and opened up new possibilities. The road ahead was electric, and it was being paved not just in Silicon Valley, But in Shenzhen and beyond, the global race for electric vehicle dominance was entering a new phase, and the world was watching with bated breath to see what would happen next.